What's going on, everybody? It's August 31st, 2022, and this is going to be episode 3 of the daily logs. So today was very interesting to watch play out. I noted yesterday that I was still bearish, was still looking for lower price movement into the sell side liquidity here, which I noted yesterday. I'll go over on the lower time frames a setup that formed this morning. There was actually a bullish setup and a bearish setup as well. So you can see here, I just want to note this, from the opening of today, we gapped down and immediately ran lower. I wouldn't be surprised if we run out the sell side. We have a remaining portion of this fair value gap here. All right, we dug into that, and then the daily bullish order block, which we can come down into the opening of this candle here. And again, in a bearish scenario, you're using all of these as just targets. What I mean by that is like the opposing PD arrays. It doesn't mean that I'm looking for bullish setups because I'm in a bearish overall trend. Okay, we already took out buy stops. We ran into a fair value gap on the higher time frame, on the weekly time frame. We repriced into a premium. So all of these are signaling to me that we're in a bearish institutional order flow. And you can see we're respecting bearish PD arrays. So if you ever want to know where you're at, especially on the lower time frames, look at what price is respecting. Is it respecting bullish PD arrays or is it respecting bearish PD arrays? And you can just follow along and see where price is respecting that. I think that's the easiest way in determining whether you're in a discount or a premium and why price should, reprice to a premium or a discount relative to the time frame, relative to whether you're bullish or bearish. So I want to go over the 4-hour time frame. Let me get this out of here. So just to note where the daily bullish order block, again, we have the remaining portion of this fair value gap here. All of these down close candles here are the daily bullish order block. So that's something to look for, for price to draw into. I wouldn't be surprised if we take out the sell side and then have some type of reprice higher. I wouldn't be surprised if we did something like this, or we just stay kind of sideways for the rest of the week until NFP. I wouldn't be surprised tomorrow if we get some pretty choppy price action, but who knows? Today was pretty clean. I mentioned last night that we were likely to draw into, I noted this fair value gap and this one. I also said if we came up into here, I would be looking for the buy side to be rated, but I'm overall bearish. So that was really cool to see. I didn't place this out here, but I'll show where you could have. Let's go into a 1 hour. So using that same PD array, this is interesting as well. We draw the discount low of, don't mind the fair value gap right now. So this last down close candle is our breaker. Okay, so price came back up to the fair value gap, repriced almost to the premium end, and then overnight we started to sell off, and then in the morning we retraced higher. I honestly thought we were going to take out the buy side liquidity here before repricing lower. I really wanted to see price get up into here, but I'll show why, or at least how you could have known that we were unlikely to raid the buy side. And that has to do with SMT divergence with NASDAQ and US 30. So that kind of tipped its hand. I really use SMT. I don't show it a lot, but it's something that is super easy and super helpful. So if you guys don't know what that is, it's just a cracking correlation between the two other indices or future contracts. And that just basically indicates to you whether price is bullish or bearish, kind of in that I like to use it more for entries. So if I see my model form and I see a bullish or bearish divergence confirming that, it really, really helps. So let's go down to a 15-minute. Let me get rid of this real quick. All right, so overnight, we repriced into the fair value gap, displaced lower, and then this morning, Let me break this up real quick. This is going to be the 5-minute on the right-hand side, just so I can show you. So I believe ICT caught the buy here, which is super interesting to watch play out. So I'm actually going to have the 15-minute just sit here. And let me go down to a 1-minute. I'm going to have the 5-minute on the right side. So if you look at here, if you're wondering what these lines are, this is the opening price, and then this is the 7:30 opening price, or 8:30 for those who follow along with the New York local time zone. So if you look at right at the opening, we immediately repriced lower. We took out sell stops here, here, and here. And if you look on the 1-minute, ICT, I believe, was using the fair value gap here. This is a reclaimed fair value gap on the 5-minute. And then you can see on the 1-minute, we had a displacement higher. Okay, so above a old high here. So that's our market structure shift. And then we come back into a fair value gap here. And this entire thing is a market maker buy model on a 1-minute. Okay, we have original consolidation. Sometimes they happen really fast. I guarantee you if you went on a 30-second, 15-second, 5-second, you could see some levels of accumulation, definitely on this side. But you can see price repriced into the fair value gap, body stayed just above or just a little bit above the discount low of that, which ICT talks about. You can expect price to go into the fair value gap, the second one possibly, and then you have the down close candle here, which is a order block, and then you have the order block here. So these are all very high, fast entries, and something that you have to practice over time. That's the reason why ICT can do this, and most people don't really believe that he can, do what he does. But if you pay attention to every single day what ICT posts, and you just follow along with no ego, with basically coming into it with a open mind, with no previous thought or knowledge of the markets, which again, it's hard for some people to let go of their own beliefs. And I see it all the time on Twitter, which again, I believe you can make money in anything, because when it comes down to it, the reality is majority of traders fail because they can't get over their own psychological issues. You can be a great analyst, but are you a great trader? Are you somebody who can manage money, somebody who manage risk, somebody who can manage their own emotions? All of these are key elements to being a professional day trader. And that takes a lot of time. It takes a lot of effort. It takes a lot of self-awareness. It takes a lot of practice and a lot of losses, a lot of time. So I hope to get to the point of ICT one point in my career where I'm able to get these insane entries. And I'm not aiming for that because that's not realistic in my mind to get perfection. But hopefully one day over, next 5-10 years, I hope to get to that point. So after we run out buy side, you may be wondering, let's go over to NASDAQ. So this is US 100. Let me zoom out to 1 hour here. Right here, sorry. So at the same time, right, at 7 o'clock, 8 o'clock, my time, US 100 or NASDAQ was making a higher high, while US 500 or ES was making a lower high. And if you look at US 30 or Dow, it was also making a lower high, which indicates to you or me that price is having a bearish divergence. It's a crack in the correlation. Okay, so ICT talks about this a lot, but it's not an end-all be-all type of thing. Most people, again, with these concepts, you have to understand there's a time, there's a place, and you have to understand the narrative that's underlying. You can't just pick any random PD array. You can't pick up any random order block, SMT divergence, fair value gap, and just randomly place orders there and then think because the trade failed that this is fake, the algo isn't real. It's because your perception is wrong. You're not perceiving the algo correctly. And I know it sounds so egotistical, but honestly, the more and more I just continue to watch ICT prove this every single day, but yet there's still people out here that do not believe this stuff is true. It blows my mind because once you see it, it's like, okay, how can I unsee this? I've traded retail trading patterns for 2 years in my first part of my career, and it was miserable. I mean, of course I made money, but it was nothing ever consistent. Nothing ever made sense. I was switching from, trend lines to Elliott wave to Bollinger Bands to EMAs to all sorts of different things. I mean, harmonics. I mean, I've tried them all. So I'm not coming from a place of I haven't tried these retail trading patterns. The only reason I'm kind of going on a tangent is because I see so much on Twitter nowadays of these big influencers. It's no hate because I understand that you can make money with anything, but these people are almost discouraging people from learning ICT, and I think that's very wrong. I'm not saying you don't have a choice in what you should learn, but this is the way, this is the path. I've preached this since the moment I've seen this because I understand that this is the probably only way to actually understand these markets. Not the only way to make money, right? Just to understand these at a very, very deep level. So that's all of my tangent for today. The rest of the week, like I said, I'm looking at 39.12 and then possibly 38.76. So let me think here. I think I have one more thing for you guys. I just wanted to kind of go over. So if I was looking to trade this, right? We have a fair value gap here, which I really liked layered fair value gaps or any PD array. So what that means is from a 15-minute, 5-minute, 4-minute, 3, 2, 1, that fair value gap is all layered within itself. So it's all fractal. And that gives it a little bit more confirmation to me. It means a lot more, especially with a narrative underlying. So to me, the confirmations for this trade, if we were to look at this, is A, we're bearish, right? On the daily time frame, weekly. So on our macro scale, we're bearish. On the 1 hour, 4 hour, we're running into a bearish fair value gap. 15-minute, 30-minute ran into the fair value gap. Coming into New York session, price failed to run the buy side liquidity, which is what I wanted. But after you see the SMT, which you should have that chart pulled up while you're trading, you can see that NASDAQ made the higher high while US 500 failed to do that, and same with US 30. And then we had the displacement lower. So price displaced lower. We had a market structure shift underneath this low here. And then we return into the 15-minute fair value gap, which this is it right here. We also have a 5-minute sitting here. And then again, if you remember redelivered, rebalanced, we have this redelivered, rebalanced here. Okay, so price uses that as real resistance and support. Okay, then price just fades away and we can look to target the previous day low. Okay, previous day low is a really good target. So that's our previous day low here. And for that setup, you could be risking, I would risk up until the premium end of this fair value gap here personally. I mean, you could go above the high and then just taking partials all the way down to here, which is 33 points. So that's really all I saw for today. It wasn't super clean or anything that I really liked. I'm just going to continue to observe the market until next week and then really start getting into it. I may start doing a little live sessions possibly later down the road if I'm feeling comfortable with it. Just let me know in the comments what you guys want to see. If you have any questions, I'd love to go over the questions in the daily logs. Like I said, these daily logs are more for myself, but I would love to at least help somebody out. So with that being said, I appreciate you guys. Please go ahead and like and subscribe, and I'll see you tomorrow.